It's no surprise the pandemic changed how we think about our homes, but in today's Property Insider video, Dr. Andrew Wilson and I discuss some of these changes and ask the question, which of these are going to be permanent and which are not. We're also going to talk about an interesting factor that you may not have thought of, which has created the rental crisis we're currently experiencing. If you want to keep up to date with what's happening in our property markets, please subscribe to our YouTube channel and click the little bell icon so that we can update you each time a new show comes out. It's no surprise that the pandemic changed how we think about our homes, where we want to live, how we want to live. But will these changed requirements be permanent, or are we going to go back to our pre-COVID housing needs? That's one of the things I'm going to be discussing in today's Property Insider video with Dr. Andrew Wilson, Chief Economist of My Housing Market. We're also going to talk about another interesting factor that happened over the last couple of years, where despite no immigration, despite stalled population growth, Australia's vacancy rate plunged to a record low. What caused that, and this is going to be reversed? Well, there's a number of factors, but it's interesting that despite not getting those 225,000 net overseas migrants that we used to get annually before, there's just not enough rental accommodation anymore. What's ahead? That's what we're going to have a chat about. So, hi, Andrew.
Hello, Michael. And we're still, working our way through the extraordinary circumstances of the last few years, and housing markets are adjusting accordingly. But I do think there's still some way to go in terms of that adjustment process. And the new norm doesn't necessarily become the new norm for very long, and particularly with the fluidity of the drivers of our housing markets, interest rates, migration, and of course the economy.
Well, it'll be interesting to discuss those matters, because I guess it was really no surprise that the pandemic changed how we think about our homes, particularly in Melbourne, where we were locked up for over 260 days. There's nothing like being confined to your home to make you look at what you need and get annoyed by things your home hasn't got. Self-isolation, lockdowns spurred, I guess, the requirement for more space, for a Zoom room, and not to just work from your kitchen or dining room table. Others also, I guess, didn't want to live with as many people. So it changed the requirement for how people wanted to live, Andrew.
Yes, and the dynamic was there already. We've had a surge in unit development over recent years, particularly in inner city Melbourne and Sydney. Once we did close our borders, it meant that there was a lack of demand from students who typically look to those areas. Similarly, the Airbnb market was also closed, with state borders closing as well as international borders closing. So that obviously created an oversupply of units in the rental market, CBD Melbourne and inner Sydney City. So it was, I guess, a perfect storm for supply over demand, and we saw rents falling and prices falling in those areas. But interestingly, and of course, as you suggested, the need for more space and not the requirement to commute into the CBD so you could live further out without having to commute and needing more space. So it was a perfect storm, as I said, of more supply and less demand for those units. It's interesting now, we are starting to see that reverse. Perhaps now it's a matter of just no supply in those areas in high demand in rental markets, particularly for houses and larger houses. Tenants are starting to have to look at what's available. And of course, affordability is another important driver of those unit options. So we are seeing vacancy rates, while still clearly higher than most other market areas and property types in the city suburbs and also the Melbourne CBD. Those vacancy rates have fallen very sharply, Michael, over the last few months, and that'll only increase demand as we open up borders again and international students come. And of course, affordability drives those into the more affordable areas, which have been oversupplied as those inner city markets. But also, of course, we have the issue of low supply continuing to come through. And so we are in another adjustment process from what occurred during the pandemic. It'll be interesting to see just how the work from home environment also affects that, whether that becomes a permanent position or it's something also that's transitory.
That widespread shift to working from home reduced the premium on place. In the past, people traded their backyards for balconies and courtyards, moving closer to the CBD and closer to where their work was. But if you don't need to commute to those employment centres, living further out became more tenable. And that was interesting because it actually meant that prices grew strongly in the middle and outer suburbs as well. So there was, I guess, that trade-off between space, place and price, Andrew.
Yeah, well, that's right. As I said, we're seeing some adjustment now coming through because of the underlying undersupply of dwellings in Australia. And now we're sort of normalising our environment with migration recommencing. It will be interesting to see what happens to prices and rents in an environment where we're seeing higher interest rates, which of course will impact affordability. And we're seeing signs of that, of course, already in Melbourne and Sydney. Vacancy rates are as low as just about they could go with having, any properties available at the moment. Rents for houses are pushing up between 10 and 20% on an annual basis at the moment. It's a very tough market for tenants looking for houses. And except for those particular areas I mentioned in Melbourne and Sydney, it's also very tough looking for a unit to rent. And I think that before long, we'll see those areas where there's still some choice becoming also prohibitive to prospective tenants.
Well, part of this, of course, was household sizes have shrunk since the pandemic began. There are fewer shared households. Some adults moved back with their parents. Now, we're not sure exactly how much this has changed. I guess the census is going to come out shortly and we'll know that. But it's been suggested that this decrease in average household size increased the demand for maybe up to 140,000 more homes. So the combination of the requirement for so many more dwellings, historically low number of investors getting in the market to provide rental accommodation. And we know that a few years ago, the APRA and the banks made it harder for investors. And then there was less new stock coming on, as you say. All that created a perfect storm for rental increases and low vacancy rates.
Yeah, well, that's right, Michael. But this is something that's been really coming through over recent years and as I said, exacerbated by the pandemic at some level. But I think there's a basic premise here that we just don't have enough houses to go around. That's the issue. And there are various policy reasons why that has occurred, going back as far as you mentioned as that credit squeeze, which was cheered on by policymakers at the time back in 2014-15 against investors. And of course, we saw investor numbers collapse as a consequence. Now, perhaps we're paying the price with those high rents going forward. Maybe a little bit of a get out of jail card blaming COVID for it. I think it's a factor that's certainly heightened the shortage of rental properties. But given we're opening up now, it'll be interesting to see if we get some relief from what is a very tough market for tenants.
Well, another factor has been the demographics. Millennials, which used to live in a lot of those apartments, they're slowly moving into family formation age, Andrew, and that means they require bigger accommodation. They're moving out of those apartments close to the CBD and looking for homes, and they're prepared to move to the suburbs as well.
Yes, it's just a question of affordability, isn't it, Michael? And I think the environment in terms of the economy is positive for being able to make those types of choices and exacerbating perhaps the power position that employees have over employers at the moment. But I think that we're probably starting to look towards the peak of our low unemployment rates and also job creation, particularly with migration starting up again. So it might shift again a little bit more in favour of employers in the outlook, particularly given the Reserve Bank has now bitten the bullet and is certainly predicting a raft of interest rate increases going forward. And of course, that's designed to curb demand, to curb inflation. But the real tricky part is to be able to do that without creating a hard landing. And that's something that really does require some faith and without sort of moving into a severe economic downturn, which might change the whole ball game again, Michael.
Well, with migration patterns returning to normal, I guess it's probably worth wondering how many of these effects are going to last and what's going to be temporary. I guess only time's going to tell.
Well, that's true, Michael. And it will be interesting to see the impact of migration because we've got basically going from no migration over the past 2 years plus back to really what will be a flood in terms of new entrants coming in the short term and particularly the student market. Of course, we've got some issues with China in lockdown at the moment, so that might offset that surge. But certainly our economy has benefited from, in terms of low unemployment, in my opinion, from lack of migration.
Well, Andrew, over the weekend, we had a surge in auction listings. Of course, the weekend before with the election, people didn't take the chance of putting their properties up to auction. In fact, there were more properties came up last weekend for auction than in the Super Saturday, the weekend before the election.
Yes.
How did the market cope with the surge in listings?
Well, it was probably a steady response overall, Michael. We had slightly lower clearance rates in Sydney, slightly higher in Melbourne, round about the same in Brisbane and Adelaide, quite sharply lower in Canberra, but they were hosting a big increase in numbers. So really a steady as she goes type of result, which I think was reasonably positive given, as you said, the high numbers of auctions in the marketplace. In fact, the highest number of auctions since pre-Easter Super Saturday in April. But I think the market's obviously, it's our last weekend of auction activity for autumn. The winter market starts next weekend, which is typically quieter. It does take a couple of weeks for that winter market to start to kick in. We will have big numbers over the next few weekends again, so that will test the market. We're obviously in that position of still being, I believe, overall a positive market for most sellers, but we are starting to get a bit more balance between the number of buyers and sellers in the marketplace now. I guess it's the last gasp of the autumn selling season, which began quite strongly, but affordability barriers have certainly taken a lot of the energy, particularly out of Melbourne and Sydney, and starting to ease in Brisbane as well. But of course, higher interest rates. We have the next Reserve Bank meeting next week to set rates for June. We have the GDP numbers for the March quarter out next week as well. So there are certainly interesting times ahead. We would expect a quieter market through winter as usual. And the question is whether this will be exacerbated by factors affecting confidence, such as higher interest rates, or whether the inputs from migration particularly will help to support housing market activity. But I think overall markets are still generally in favour of sellers, although certainly well below the boom time results earlier in the year, and likely to continue to ease given the quieter period ahead of us.
Well, I look forward to catching up next week, because then we'll actually have your My
Yes.
Housing Market results for the month of May. And in fact, for the first 5 months of the year, it'll be interesting to see how the markets have responded.
Absolutely, Michael. And as usual, it's interesting times in the housing market.
Speak next week. Thanks, Andrew.
Thanks, Michael.